Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest with me today. He's new to the show. I'm speaking with Bruce Berger, who runs the website turnaroundstockinvesting.com. How are you doing today, Bruce?
I'm great, Mike. Thanks for having me today.
Yeah, I'm glad you're here. This is, as I said, the first time you've been on the show with me, so I thought real quickly I would let people know how I met you and so forth. So back in March, I went to a conference in Orlando. It was full of industry people. It was a financial conference, and I happened to bump into you and meet you, and we had a couple drinks or went out to dinner one night with a couple other people. And one thing about you that really struck my attention is that, which I found refreshing, is that you're someone who actually looks at balance sheets and the fundamentals of stocks that you invest in, whereas nowadays so many people just use algorithms or only charts or only ETFs and really have no idea what's going on with the companies that they're investing in, which is just the day and age we live in. But there's something to be said for old-fashioned work and digging into the filings. So I was hoping you could explain what it is you look for when you invest in a stock, and maybe we should ask you first, how'd you get into this business and what's your background?
Sure. Thanks, Mike. Well, I exclusively focus on investing in public companies that are going to have a corporate turnaround. And I got into this because for the past 3 decades, that's all I've been doing. I have a background in buy distressed companies and turn them around. And I've been doing that for about 2 decades. I'm also a certified public accountant, certified fraud examiner. And I started out, interestingly enough, when I was in high school and college, being fascinated with financial statements. And I met a famous value investor named Marty Whitman. And I worked with a world-renowned value investor, Bob Rabati, who's still a great friend of mine, and just progressed through those decades, continuing to invest in turnarounds, both public and private. I created turnaround stock investing in December of last year, so it's really just been running for a few months. Previously to that, I've been working at a large distressed hedge fund that just focused on turnarounds. And I worked for them for about 1.5 years. But I've always had the entrepreneurial spirit and decided that I would just go back out on my own and continue to buy companies and invest in public stocks. What I do is sort of unique. Most value investors in public companies really just focus in on the financials, which I do also. Again, my background as a CPA, looking at financial statements is something I'm very familiar with. But I'm also a sound believer that you have to really manage your positions. And so most value investors will look at a stock, they'll buy something at $10 that they think is worth $20, $25, and they'll just, if the stock continues to go down, they'll just ride it down. And I don't do that. I really do cut my losses, and I look at charts, which is sort of voodoo for value investors. But because I've been doing this for so long, I actually do believe that the public markets have a lot of wisdom when a stock is trading. And the other thing that I really bring to the table is that I actually fix companies. So when I sit down and speak to a CEO or a CFO of a company, it's hard to fool me because I've been there, done that. I've sweated payrolls, I've fixed companies, and I know when somebody is really fibbing to me or not. And usually what you'll have with a CEO who's turning around a company, if he's very good, he'll often say, I don't know. And that's really the case with turnarounds, is that you don't know if they're going to work. You can have great industry experience and you can even have a great balance sheet going into a turnaround, but you just don't know if it's going to work. And that's my philosophy with turnaround stock investing. I believe in the 20-80 principle. It's the Pareto rule, that 20% of the stocks that you buy in any given year are going to give you 80% of your gains. And when you go and buy those stocks, you never know which ones are going to be the 20% that win. And people on Wall Street rarely mention that, right? Everybody's got a wonderful pedigree, Ivy League schools, and they think their analysis is great. And they do good analysis. But there's a lot of uncertainty in investing in value stocks. You know, as I like to say, a value stock is created because it's in trouble. And it takes a lot to turn around companies. And that's why I like to incorporate the fundamental analysis and the technicals.
Well, I know when we were talking before, you were looking at or had invested in the past a shipper, and that was real interesting to me because around, I think it was 2012, 2013, somewhere in that time frame, the shipping sector had gone through a terrible bear market and had started to go sideways, the stocks inside the sector as a whole. And I took a stab at buying a couple of them back then, but I use charts primarily to identify when I think a sector might be bottoming out. And there's various, technical patterns. But a problem with that is that when you just look at the charts after a big bear market, you really have no idea of knowing which stock in a sector is going to be the best one, which one isn't going to recover, and so forth. So what are some of the things you kind of look at to determine what companies might do well and what won't?
Right. So that's a great question. When you're looking, there's different types of turnarounds. You can invest in an industry like I can discuss the fertilizer industry or the tanker industry right now. What you want when you're betting on a cycle turn in the industry as opposed to a specific company where their CEO comes in, it's a healthy industry, but the company's doing trouble. There are two different types of turnarounds. So what you want to do with a cyclical turnaround, you want to make sure that the balance sheet is strong enough so that you can survive. Because what often happens with a cyclical turnaround in like oil service or shipping is that it always goes on longer than you could ever expect. Typically, what has to happen is companies have to burn cash flow. I like to say they have to burn all the furniture to stay alive, because that's just what happens when industries turn down. Everybody wants to be the last man standing, and those who can survive are those who have the best balance sheets. And what typically happens in an industry is those that are leveraged will go bankrupt. And in today's world, the debt holders will convert that debt to equity. They'll come out with a clean balance sheet, and that company will start competing against other companies that are levered. That's why the first criteria when you're looking at a troubled company in a cyclical industry is, what does the balance sheet look like? And you say to yourself, does it have enough cash to survive for 2 or 3 years? Because whatever you think the time it will take to turn around, double it. Typically, in my experience, it takes 7 years for an industry to bottom, from the actual peak to the bottom. Now, it could be five, but it's usually 5 to 7 years, and that's a long time. That's why I also use charts when I am investing. I will go through all of the financial statements and determine what the cash burn rates, can the company just break even? But then the markets are so wonderful at usually, a company that is going to start to bottom. I'll give you an example of the dry bulk industry. So dry bulk had been going down for years and years. And then in 2016, many of these stocks, everyone was losing a vast amount of cash, and companies then did equity offerings. And what's interesting is they did these equity offerings right at the bottom of the market. So you would just see, like, for instance, there were Star Bulk carriers, which had gone down like 90%, right? The stock just kept making lower lows and lower lows and lower lows. But then it got to the point where it stopped falling with horrendous news, because day rates were such that everybody was losing cash, but yet the stocks weren't falling. So the market started to sniff out a bottom was occurring. And that's exactly what happened. So you had stocks like all of these dry bulk shippers start to rise enormously. A lot of them went up 500-600% from there. That's why I think it's always important. I actually invested in Starball, but I had been early in it. Like I had invested before the bottom, and I stopped myself out, which is beautiful because then you have this not only the physical but the psychological capital to wait for the actual bottom, because it's usually a question. It's not if it will turn, because these are cyclical industries. It's when, and you want to be there when it turns. And most people, what they do, value investors, is they just keep progressively buying more and more and more as the stock falls, and they have a large wipeout, and they usually sell at the bottom. And that's what you don't want to happen. That's why you have to do the fundamentals and the technicals, and that's what I do.
Right. Well, in today's, what I said at the beginning, I found your take really refreshing. Is that in today's markets, it seems like everyone wants to buy, Netflix or Tesla or Facebook, and that's what they tend to talk about on television. These kind of momentum technology stocks, but these stocks have been going up for years, and now honestly I think some of them are starting to falter, like Tesla obviously, but Facebook is even looking, the price action's a little shaky, but it doesn't matter. These stocks to me, I don't know what they'll do 6 months from now, but I don't want to own them over years from here. So I'm more, the longer, what I'm trying to say is the more and more I do this, and as the years go by, the more and more I want to become more of a value investor myself that holds things with a year look of, an outlook of years down the road instead of weeks or something, which seems to be the focus. But to do that, you really have to do the type of work you're talking about. But let me ask you this. You mentioned the agriculture industry. That's a sector that I'm interested in because the commodities themselves, corn, wheat, cotton, and so forth, sugar, they have had bear markets now, for years, even though they're up a little bit year to date. I think it's 4 or 5 years they've been falling. So that seems to me to be something that might be an area where perhaps agriculture companies could be something for turnaround plays. What do you think? Or am I looking in the wrong direction?
That's true. I actually got the members of my website in Mosaic. We started buying Mosaic shares about 22. I think it's about 27 now. And I think that's a company, if you look, they sell potash and they sell phosphate. Both of those businesses, you have to look at the supply and demand within both of those categories, and it's only going to get better. The supply is going to decrease because the margins have been horrific. People have not been doing well. So I like Mosaic. There's also a company called CVR Partners, symbol UAN, which is an LP, which has fallen from about $22 a share to $3. And I've been, I'm not going to say trading, but I like that particular stock. But again, I follow very specific technicals at the bottom. So I've been in and out of it. I've been buying it at like 330 and I stop out at like 290, et cetera, because when I'm investing in a very leveraged balance sheet, I'm very cautious. So I do believe that something like CVR Partners can go up 3 times. But if you're early, as I've mentioned before, it's not pleasant. So you have to watch these things. If CVR had a very clean balance sheet, I would just sit in it. To give you an example, I had my members invest in Dawson Geophysical, which is a geophysical company which had a tremendous amount of cash per share. It could survive anything in the oil service business. Stock is now 7.5, and I think that will go substantially higher. In that case, you can invest and sort of even average down because the balance sheet is like a fortress. You really don't have any risk of going out of business. And a Mosaic's balance sheet, even though it's slightly leveraged, is also very solid. But when you invest in something like a CVR, which is a very leveraged balance sheet, you have to watch it. So I've told people for instance, with CVR, once it breaks out at 3.5 or $4 a share on a lot of volume, you're sort of home free. So you can, again, I'm not an investment advisor. I basically have a membership where I show people what I'm doing. And they're out, they can do what they want based on their own risk. I'm managing my own capital and I'm just sharing the opportunities that I see. So people have to establish what they're comfortable at. But I do believe there's a lot of opportunity. If you look at the charts for all of the agriculture products, wheat, corn, soybeans, they're all at decade lows. So now is a great time to get involved with agriculture. And nobody talks about it, right? Everybody talks about pot stocks and this and that. When's the last time anybody ever said to you they're going to buy corn? So that's the ultimate contrarian indicator also. And the charts look good. So you look at the fundamentals and the technicals, and they're both lining up nicely.
Actually, I did, I think it was 2007 or 10. I can't remember which year it was, but it was either 2007 or 2010. I ate lunch with someone that lives in my area, that very wealthy individual, and they were buying all these agriculture stocks, and it was at the top of the market for the commodities. So, but yeah, no one's interested in them now. That's for sure at all. But I'm very interested to see, what they do, and I got my eye on them. I don't know how to call the bottom. Maybe they have bottom though.
Well, you never can. Usually, in my opinion, what happens is that bottoms are created technically when you see horrendous news and the stock or the commodity doesn't fall anymore. That's your signal that you're very close to a bottom.
Yeah, you mentioned that with the bulkers. That's what happened to them, and
exactly.
So, well, I don't want to keep you all day, and hopefully we can do a follow-up interview sometime next couple weeks or a month or two or whenever you're available. But as we wrap up, just if you can tell people real quick, where can they go to get more information from you?
Yeah, people can visit me at www.turnaroundstockinvesting.com. If they come to the site, they can take a look. I have a bunch of videos up there so you can see how I do my analysis. I have a membership service where I offer for $99 a month. People can get all of the opportunities that I'm looking at and what I'm buying. And I also have a free ebook, which I think everybody should download. There's a wealth of knowledge in there, and it's free. And that basically is a culmination of 30 years of experience. So it's a great opportunity for somebody to learn what I do and how they can do it themselves. I like to say what I'm really trying to accomplish is to help people become their own hedge fund manager, because they can do it. And that's my goal.
Yeah, it doesn't sound, I know that the word sounds intimidating, hedge fund manager, to people, but if you don't think of a hedge fund as a computer program, but as picking out stocks and hedging positions, perhaps, it's not as complicated as it sounds at all.
Exactly. People pay a lot of fees for things that they could really do on their own. They just have to get the confidence that they can do it. And that's really what I'm helping people do, to have confidence to become a value investor.
I appreciate it myself. Well, thanks for talking with me and everyone else, and talk again soon.
Thanks, Mike.